This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performances do not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk. There's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading.
Good afternoon, everybody, and welcome to the Daily Market Wrap for February 28th, 2007. In the news today, Fed Chairman Ben Bernanke renewed a warning to the U.S. Congress that failure to take action soon to prepare for the retirement of aging baby boomers could lead to serious economic harm. Bernanke did not address the outlook for U.S. interest rate policy or Tuesday's collapse in global stock markets in his prepared testimony to the House of Representatives Budget Committee, which were nearly identical to remarks he delivered to a Senate panel last month. The economy grew at a sluggish 2.2% pace in the final quarter of last year, much slower than initially estimated. The latest reading on gross domestic product released by the Commerce Department came a day after stocks on Wall Street and around the globe took a nosedive and showed the economy in a considerably weaker state than the government first reported. It had initially reported the expansion in the last 3 months of 2006 to be at 3.5% pace. The Chicago Purchasing Managers Index fell to 47.9 in February from 48.8 in January, suggesting a contraction in regional growth. Economists were forecasting a reading of 50. Among the index individual components, the prices paid index rose 63.2 from 54.9 a month earlier. New orders rose 48.7 from 46.3, while the employment index climbed to 50.6 from 42.8. Sales of new homes plunged 16.6% in January to a seasonally adjusted rate of 937,000. It was the slowest sales pace in 4 years and was the biggest percentage decline in 13 years. Sales are down 20.1% compared with January 2006. The decline in sales was much sharper than expected. The inventory of unsold homes dipped to 536,000 from 537,000, representing a 6.8 month supply at the January sales pace, the most since the 7.2 month supply in October. In earnings news, Sprint Nextel Corp, the nation's third largest wireless carrier, said fourth quarter profits rose 33% on stronger revenues, but the company continued to lose high-quality subscribers. The company reported earnings of $261 million, or 9 cents per share, during the October-December period, compared with $195 million, or 7 cents a share, a year earlier. The Home Depot will pump $2.2 billion into improving its business this year, even as it expects lower earnings and slim sales growth. Home Depot said that for fiscal 2007, it expects sales growth in the range of flat to an increase of 2%, a decline in sales at stores open at least a year in the middle single-digit percentage, and earnings per share decline of 4% to 9%. Dollar Tree stores reported its fiscal fourth quarter profit grew as sales increased. For the quarter ending February 3rd, which included an extra week, the company earned $97.6 million, or 96 cents per share, up 13% from $86.5 million, or 81 cents per share during the same period a year ago. The Washington Post reported a 7% drop in fourth quarter earnings Wednesday as increased expenses in its education division offset higher revenues. The company earned $95.5 million, or $9.97 a share for the 3 months ending December 31st, compared to a $102.4 million profit in the year-ago quarter. Economic reports scheduled for Thursday include the initial jobless claims data, personal income and spending for January, ISM for services for February, and construction spending for the month of January. Scheduled earnings reports for Thursday include Dell, EchoStar Communications, Smithfield Foods, Cooper Tire and Rubber, Kohl's, Del Monte Food, Gap, Health South, and Novell. Stocks in the news. Ciena was upgraded to overweight from neutral by JP Morgan as the broker said the recovery in the optical market is greater than it first expected. Apple Inc. Chief Operating Officer Tim Cook reiterated that the company remains on track to release its iPhone mobile phone product in June and that Apple expects to sell 10 million of the devices in 2008. Merck & Company said it expects its first quarter profit will be 63 to 67 cents a share, excluding restructuring charges related to site closures and position eliminations, and targets reported first quarter earnings per share of 58 cents to 64 cents. That's the market wrap for February 28th, 2007.